Hey guys, Mike here. So kind of a mixed bag today in the market because you got small caps getting crushed, which we'll get into. You got the Qs going green because of who? The Magnificent Seven. Say it with me. All right, so they come to the rescue and stuff, especially Tesla. Huge day for Tesla, which we'll get into that as well. Also, AMD had a very good day. But, we'll start off with this and we'll get into the charts. And, one thing I'm working on for tomorrow is something I came across, which is what happens when August performs or is up a certain amount, right? And basically from January to August, what happens from September to December? I ran across some interesting information, so I'll bring that to you tomorrow when I research it up for us. But one thing to keep in mind, which might actually force the Fed's hand when it comes to shrinking their balance sheet, is what's going on with foreign countries when it comes to buying our debt, right? We depend on people to buy our debt. That's how our country functions, right? And you can see what's been happening here with like the amount of treasuries that the Chinese are holding, right? It's been declining for quite a while, but it's fallen off a cliff since 2022. And when you bring in the other big holder of our debt here, Japan, you can see they're the same way, right? So here Japan, this goes back to 2010, and you can see starting at the beginning of 2022, fell off a cliff. It's somewhat increasing now. You got China right there. You can see that's been decreasing. What's funny though is when you look at total, as far as foreign holdings of U.S. Treasuries, it's still ticking back up. Now, of course, this is important because look at these deficits we've been running and we're going to run, right? I mean, 2020, 3.1 trillion, 2021, 2.8 trillion, big drop off in 2022, and then projected $2 trillion in 2023. So needless to say, between 1-2 trillion, maybe a little more. And the reason why I'm saying it could force the Fed's hand as far as when it comes to shrinking their balance sheet is because, remember, the Fed is the biggest buyer of our debt, right? They hold 20% of the balance sheet as of February of this year. 10 years ago, it was only 10%, so they've doubled it. Remember, they were the biggest buyers in 2010, 2020. We didn't know that at the time. And, of course, that's why more money went into the stock market because the government or the Fed was propping up buying the treasuries and bonds, so other institutions didn't really have to, so they went into the stock market. And so, we'll see if this continues to shrink on the other side, but if it forces their hand, because remember, what are we based off of here? Debt, right? We got, a lot of people in this country don't pay any taxes, so therefore, they don't bring in enough to even try to make it function, but also you have a bunch of drunken sailors up there in Washington just spending like there's nobody's business. And it's not like they're ever going to decrease defense spending and of course every year more baby boomers retire. So that's a huge part of the budget. And so that will continue to increase and have to be paid. And so these deficits aren't going away at all. And the only way we can continue going on is people just got to keep buying it up and basically financing our lifestyles, or our government lifestyle, that is, and how we work. And so if it forces the Fed's hand into quit tightening and they have to go back and start buying debt, well, then what's going to happen? The market's going to go, that's fantastic. All right, woohoo. And they'll probably just start going up again, right? And so just keep that in mind. We'll see how it works out and stuff. I mean, I saw somebody put in the Discord today about the amount of deficit we're supposed to run this year is just nuts. I think in 2024 as well. So we'll see how that goes. Now, I've told you, as far as like what makes the market function and how it's all about liquidity and these algos and these quant funds, that kind of stuff, these computers. And so I ran across this gentleman, his name's Peter Grandage, and he's been in the market a long time. So just to hear somebody else from another generation kind of echo what I've been saying, put a smile on my face.
Well, I think some of it is obviously taking profits. I think, again, we don't often speak about it, David, and I think because we get too caught up in the way the market is now. But this stock market is nothing what it once was 20, 30, even 40 years ago when I started. It's dominated by machine-driven or computer-type programs. Very few of them are interested in what the market once was, a place to become part ownerships of businesses. It's really a sophisticated, algorithm-driven programs that move markets on a daily basis. And because how that is, when they get overextended one way, they sell off, and vice versa, higher.
And of course, another thing he didn't even talk about was these zero DT options, right? I mean, these things just keep becoming an even bigger part of the market on a daily basis. As you can see, this is just SPX and everything. But I mean, again, started in 2021, really ramping. They've been around since 2017, but you can just see it keeps getting more and more and more popular and stuff. And this absolutely is why you see these crazy moves or something like that on a daily basis. Is why you see these moves in Tesla, which I'll show you a little bit later on as well. Let me know your thoughts on what he had to say and zero DT options, as well as how they affect the market. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so that's going to lead me into Tesla and some other stocks, but I do want to go ahead and put a warning out there. In case you're unaware of this, be careful, be careful, be careful. This is something somebody brought to my attention in the Discord, and it was kind of funny because this company right here, VFS, VinFast Auto, all of a sudden, you know, they IPO or whatever, and it's usually these Asian companies. You'll see it in China, Korea, things like that. And this thing just skyrockets, right? I mean, it goes from like 12 bucks all the way up to, I believe it was $93 as a high. And so you're talking about an 823% move in 18 days. And then look at this right here. So it became the third largest EV automaker by market cap, okay? And just look what happened to this thing. It has fallen 72% in 8 days. So be careful. Hey, if you wrote it up, put it in the comments. Congratulations to you. But boy, you want to talk about pump and dumps they put out here in some of these Asian countries, this is it right here. And so safe to say it's no longer the third largest EV automaker anymore. Now IWM, this one right here got absolutely crushed, down 2% for the day, worst of all the indexes by a country mile. And you see that big red candle. And we talked about this head and shoulders. Maybe this is the right shoulder forming out. We'll have to see. Obviously, on the daily, you still got the MACD below that zero line. It was like it was curling over, of course. And so we talked about that yesterday. Again, on the hourly, you know, maybe it keeps heading down in this fair. That's a fair value gap right there, shade below it right there. But again, it looks like on the hourly, the MACD is trying to at least try to curl back up. It looks like it's starting to get that oversold territory. Now, one reason, of course, is regional banks were red. All banks were red. And I'm not sure I didn't find any direct news on this. I mean, maybe it just has to do with the 10-year Treasury popping today, and the market said, okay, let's try to sell off on that. But if that was the case, you would have saw a lot of high beta stocks sell off, and they just didn't. And so, again, the market's going to do what it wants to do there. I didn't see any specific news on regional banks. Now, that leads us into Tesla. And you can see big move up right here. And this is what we talked about. If news will push it down, will news push it up? And this has to do with delivery numbers coming out of China. And I will show you the second thing I told you to watch out for as well. But you can see that 50 moving average right there. It's trying to get above it, acting like a brick wall right now. It's above that trend line we had talked about, trying to hit a 260. Looks like the MACD is trying to cross over that zero line, which would be super bullish for it. RSI is already above the 50 line. You can see what I'm talking about with the 50 right there. Now on the hourly, you can see we're still not overbought right there. Again, MACD looks like it's trying to move above that zero line. The 50 still acting as resistance. And the other thing I talked about was those calls, right? When you see, if you see news, positive news, which were the deliveries, come out, and then you start to see those call sweeps coming across, hundreds of thousands of millions of them, that's going to push Tesla up. And that's what started happening today. Again, keep an eye on the 260-ish area. That was resistance last time. We'll see if it can break that this time or it gets rejected again. Now, AMD, I don't know what happened here at 11:54. Tried asking members. There was some news that come out at 9 a.m. I couldn't find anything. Let me know in the comments if you did. But there was just this big, huge pop. And all of a sudden, because it was flat for the day, really, it started moving up. Okay, and we talked about how this week was going to be the week. You're probably going to see a decision made because these are going to break through that trend line or break out of this formation here, and it did break to the bullish side. If we bring in the moving averages, you can see it's trying to get above that 50 moving average right there. And as you can see, it's right back up in that supply area right there. Gonna start hitting resistance, but if it can regain that 50, probably do a retest of that area, you know, you can see this absolutely move higher, but it's not gonna move on its own because all of the semiconductors turned green today. And so we'll see how it's gonna react. But when you look at some of these stocks like Meta, right, it's just here it is, trying to get above that 50. You can see us sitting at resistance right there. If this starts to roll over, of course, then you're going to have a lower high, which is not good. And using the volume profile, we can see you got heavy resistance going there around the 320 area. And so this can get above the 50. It's in that volume gap. Absolutely can flow up to 320. And it seems like a lot of these stocks are either quietly doing this or just want to move. And you can see what's Apple doing, just very quietly. It's just filling the gap. No big news. Nothing going on. Obviously, it's got the iPhone release coming up and everything. And so it's just trickling on up. It's regained all its moving averages. And you'll see some resistance, probably not to like 193-ish, it looks like. And so, again, keep that one on mind just because, why? It's the largest weighted move out there. And this is why the Qs were green today. If you're wondering why everything else looked red and it was green, this is why. These stocks right here. And Netflix actually had a big day today, started moving up in the gap, within a gap. So this is the gap on earnings. The bigger one was a gap in earnings a long time ago. But it broke above that resistance right there, starting to move up in that gap. And as we kind of pan out here to the weekly view, I mean, you can see that's the all-time highs to the left up there. But right now, it's in this volume gap right here. So this thing can absolutely move up to fill not one, but two gaps if the market allows. And it seems like that, I don't know, it's going to be tricky. Obviously, it's going to be volatile this month. But that seems to be what it wants to do, which would give it an extra 9% move up right now. And then you got Airbnb. This one right here had a big move up 8%. And we'll look at this on a higher time frame. Obviously, you can tell the stock has been pretty much destroyed since 2021, just down and down. And it's going to have a lot of resistance around 148. But the reason it moved up wasn't fundamentals, didn't have any more Airbnb participants raving about it or anything. It was just it's going to be listed within the S&P 500 before the open of September 18th. So usually stocks, there's another stock mentioned too. It also got a pop right there. So we'll see if this momentum continues for it right there. But that's the reason why Airbnb went up so much today. And with it being in that volume gap, I can see it moving up a little bit more. We'll have to see because this was a big move today. Now, Palantir, you guys always ask about this one. Basically it's done its job, right? It sat there and it held around that 13 to 15 area right there. Still below the 50, getting rejected off of it and everything. I'm going to put a trend line right here to see if it actually break above this or is it just going to start trending down. But so far, it's held that area right there, as we talked about. If it breaks that area, yep, we're definitely heading down to the 12 somewhere in there. If it breaks that, we go to the 10s. But again, today just seemed one of those days where tech was actually up. A lot of them were up. And so, while banks and other stocks were down, tech was doing well. And so we'll see how this works out in September. And then you go lastly to Disney. This is one of these ones, I mean, it's an interesting one because a lot of people I see talking about it, and it's just one of those things we keep saying, man, it's got to balance because that right there is an enormous volume gap when you look at the higher time frame, right? And why? Because look how it moved up. You might get some support right there, maybe right there, but it is just a rough one. I know a lot of people, they're DCAing into it, right? And so, because that's what you want to do, buy into fear if you like whatever, but it just has a lot of problems. And we'll see, again, if it finally gets this technical bounce that everybody keeps waiting on and stuff. Now, one to watch, and this is the last thing here, U.S. oil. Nice day for U.S. oil. Been quietly breaking out here. We're going to see if this thing will continue to move up. It will hit resistance around 87, 88. If it gets above that, though, I mean, you can see this thing start to move, right? So that will not be good for us or inflation data down the road. Now, don't worry about any earnings tomorrow coming out, but I would say you do have S&P Global Composite PMI, S&P Global Services PMI, and then you have the ISM Services Business Activity, Employment, New Orders, PMI, Service Prices, all that good stuff, which could absolutely affect markets. So keep that in mind. So start watching oil, start watching these yields, see how they're going to do. Start watching the dollar. It was green today too. That's what was weird about it. You had the VIX was up 4%. You had oil up. You had the dollar was up at one point in time. The yields were up. And the Qs was green, red to green, right? And so it was just very volatile all over the place. I think the VIX actually ended up red for the day, even though SPY was red too. So it was interesting times to say the least. And so I think that's what September is going to be. We'll have to see where you're going to just have this great day and you're going, hey, all right, we're going to the moon. And then, boom, sell off the next day, right? So because IWM was hot. I didn't see any particular news, so it had to do with yields, great. But again, didn't affect a lot of the tech stocks. The Magnificent Seven was what was just pushing things up today, especially with Tesla red hot. So we'll see if that can continue tomorrow or not. And especially since news events seem to be swaying, right? So far, bad news is still good news for the markets. We'll see if we get more bad news tomorrow to push it up and stuff because we'll still have job data coming out this week and everything else. And it is a short weak. So you tend to have lower volume, so you can get these quick pushes up and everything. So just keep that in mind. So let me know your thoughts on all the stuff we talked about in the video today. Please hit that like and subscribe button, and I will see you guys tomorrow.